Welcome to the CBDC video series, a way for regulators, researchers, and international organizations to learn more about stablecoin technology, design, and policy considerations.
So thanks so much for joining, either now live or if you're listening to the recording later on. So in this presentation, I'm going to talk about retail central bank digital currency, or CBDCs, and the opportunities and limitations they pose for financial inclusion. In this presentation, I'm first going to talk through what are the causes of financial exclusion, or at least some of them, and really then go into how CBDCs can address or contribute to financial inclusion, and then conclude with the next steps for what regulators and policymakers can start thinking about in terms of moving forward. So it's important to note that financial exclusion is rooted in marginalization. And this can range from anything around historical levels of inequality, anything around questions around religious persecution, but really one of the biggest reasons also is simply the lack of wealth. People don't have enough money that really kind of necessitates having a bank account. But then moving on beyond this, it's also around limited education on financial tools, financial institutions entirely unable to kind of take on the credit risk of people. And this can be kind of particularly in emerging markets where you don't have a robust financial institution system. And really what this means, though, is that in a world that we're seeing widening economic inequality, it's only making people, the risk is that we'll actually see further exclusion. And today we have 1.7 billion people who don't have access to a bank account, and billions more don't have access to other financial services. And this includes access to savings accounts, loans, things along those lines. And the problem is that financial institutions have really just not trickled down to people. We're seeing a case where simply a number of people, billions of people, don't have access into a way of really generating wealth and remain impoverished. And so CBDCs can kind of step in and contribute to thinking about this problem and addressing some of those problems. So a central bank digital currency is essentially a digital currency that's issued by a central bank, kind of like fiat cash that a central bank issues. The difference is, of course, that this is in a digital format. And what this allows a central bank to do is they're able to create a new payment system. And so there's two types of CBDCs. One is a wholesale and the other one is a retail. So a wholesale is what we think of is traditionally what financial institutions would use. This would be used for settlements, for interbank payments, things along those lines. A retail CBDC, however, would be meant directly for it to be used directly by people on the ground, the everyday person. And how this would work is that a retail CBDC account would be held by people who would basically have access into the central bank core ledger. The reason why they're able to do this and the reason why it's more inclusive is that a central bank doesn't have the same incentives as traditional financial institutions. They're not profit motivated. And this means that they don't have the same credit risks that financial institutions face. Central banks are able to issue money directly to people. They're able to print money. They're not taking on a credit risk by having bank accounts. And what this allows is for people who then do have a retail CBDC account, they're able to then make payment transfers with each other and with other people. And so then thinking about how a CBDC system can change digital payments, it's able to do two things. It's able to transform the payment system into one that's more digital and create financial history and digital identities for people who've been historically excluded. So on the first point, on transforming the payment system into one that's more digital, at the moment, fiat cash is quite expensive and difficult to send around to other people. It's as you can imagine, you have to have security around it. It involves printing. It involves getting cash out to people in very rural parts of the world. A CBDC is a little different. It's far more secure. It's far faster. So it's able to be touched by people who normally can't get cash in places that are maybe insecure. This is particularly important for women and people in rural parts of the world. The other thing is it's a common point of entry. So it's a common digital currency, which allows for a more interoperable system with a centralized access point and unit of account. And so how we can think of this is, for example, in the United States, we've had the recent COVID stimulus check. The problem is because there's so many different payment systems payment providers, you have financial institutions, you have fintech companies. They're not particularly centralized. And so what you're seeing is a slowdown in the process of getting money to people. And then the other thing you can do is you can actually integrate fintech and traditional financial products. By having a common interoperable system, you're able to then integrate different payment providers. The next thing is thinking about financial history and digital identities. So it incentivizes governments to begin creating a digital identity for people who've historically been excluded, who don't have any form of ID at all. And then if you're thinking through the integration, as discussed earlier, you're also able to integrate it with other financial products. But more importantly, it's able to solve a bit of the chicken and egg problem, in that to have access into the financial ecosystem, usually you need some form of credit history. But to get credit history, you need access into the financial ecosystem. A CBDC account is able to kind of bypass that and be far more inclusive for people who normally just can't get access and entry. And then lastly, it incentivizes governments to create shared data standards for other government services. So thinking about in a post-COVID world, we need a more digital system, one that doesn't rely on intermediaries. So right now, the current financial ecosystem is predicated on intermediaries. So for example, a central bank to commit to monetary policy, they set interest rates, but then it's up to retail banks and investment banks to provide loans at interest rates. The problem is they don't necessarily do. They might either hold the cash, or they can be highly discriminatory in the way that they provide loans. A CBDC system allows for reframing the structure into one that's far more direct between people and government. We've also seen that with COVID, it's disproportionately affected certain communities. And in this case, the problem, of course, is that we need more targeted interventions. A CBDC system does allow for that. You can have targeted stimulus programs, such as cash transfers and automatic rebates. And then lastly, you're able to create a more digital system that allows you to bypass in-person transactions. So you can then have mobile and online payments. And then, of course, support a network for creating new innovation. So new financial products that operate on this system. It's critical to note that CBDCs can't solve the underlying causes of financial exclusion. They really can't. They're a technocratic solution at the end of the day. They're not able to deal with the fact that it relies on internet, it relies on mobile phone penetration, and it really doesn't solve the underlying problem of lack of wealth. And so when thinking about that, when thinking about kind of broadly financial exclusion, a more broader social transformation is needed, where you're going to have to address the underlying causes. And this might require addressing corruption, thinking about social inequality, lack of wealth, housing policy, religious persecution. The list goes on and on. But the point here being that CBDCs are just a technocratic solution. And so then, if framed as a technocratic solution, the question then is, how can you frame CBDCs to go beyond that? And really the way to do that is thinking about a national right for a CBDC account. And this is to define an aspiration for an inclusive financial system. This isn't unprecedented. For example, in France, everyone has a right to a bank account. And I think similarly, you'll need to have a national right for all residents to have a CBDC account. And I'll also acknowledge that just because there's a right doesn't mean that it's enforced. And we know that for a fact, where a number of rights are historically not enforced, whether that's around religious freedom or voting rights. But at least it puts in the aspiration, and it puts in the initial framework for achieving that goal. So it puts in a precedence where you can at least have social movements around it. You can think about kind of legislation around it. You can also think about a legal process. So in terms of key takeaways, CBDCs can contribute to financial inclusion. They can be built upon to create a digital ecosystem, but they can't address the root causes of financial exclusion. Additional work by regulators and policymakers is really needed for this. They can reshape the relationship between central banks and people into one that is more direct, more engaged with people on the ground. But of course, it's critical to have a national right to a CBDC account for any of this to even happen. A lot of research on CBDCs is primarily focused on kind of design frameworks to ensure financial stability, thinking about the data implications, but a lot of it hasn't really talked about financial inclusion. if you look at, for example, the Bank of England's recent report, if you look at the Bank for International Settlements, there's maybe a section or two focused on financial inclusion, but they're pretty small. And so I think what's critical moving forward is actually elevating the voices of people who are excluded. This can't be a top-down approach. It's a unique opportunity in history to create a new financial system, but if it's not including the voices of the people who are actually excluded, it's not going to solve that at all. And so really the first part and the first two steps here that I lay out is actually first doing that. Once you've kind of understood what are the causes of financial exclusion, it's then bringing in private players and saying, okay, how can we then create an ecosystem? What are the design mechanisms for that? Once this is done, and once you've really identified what the causes are and what the solutions might be, then you can move on to testing a digital currency in a closed network, specifically testing for seeing how a CBDC design can promote financial inclusion. This allows for the creation of new data sets and thinking about new frameworks. And from this, you can then actually build out a thorough framework for CBDCs to address financial inclusion. And so thank you so much. That concludes the presentation, and I'll be taking any questions you might have. And so I think I see a few questions here already from the audience, so feel free to propose, to add in any other questions you might have as well. So the first question is how might CBDCs undermine financial inclusion efforts or be weaponized against people? So one is, I think, how it might undermine the financial inclusion efforts is that what it could do is essentially, you can see a digital divide. If you see some people switch over to a digital currency, but others don't, who are then reliant still on cash, you might see an economy that's further digitized as well, leaving people who still don't have access into that ecosystem. The other problem with it too is that really there's not a lot of on-ramp entries. So one thing is right now we see a lot of digital currency. The way to enter usually is through a crypto exchange. But you're going to need other ways of entry beyond simply an exchange, whether that's through kind of local branches, through people, through mobile phones. So that's on the financial inclusion efforts. On the weaponization aspect, the thing to really understand here is the data implications. CBDCs are held by a central bank, which means there's some data exhaust. And the concern here is that a digital currency could be tracked. It could be used as a way to understand how people are spending money. It could also be limited to certain people and entirely excluded from others. And so that is, I think, something that is a key concern. And I think there is some growing literature on that aspect. The second question is should the development of CBDCs be relegated only to the central bank and regulatory bodies, or should private sector play a role? So for this question, no, I think there's a critical role that private sector plays. And I think what public sector should be doing is putting in essentially the framework, the guardrails for innovation. So, and defining what the role of private sector is. I think the challenge right now has been that we haven't actually seen comprehensive comprehensive policies or a framework around what is the role of public sector and what is the role of private sector. And I think that's what we will need. And I think that's really how you're going to create a comprehensive ecosystem, one that is inclusive, because if it's only public sector, I think you're not going to get the innovation that you need, or really a lot of the solutions that can actually hit people on the ground. So the third question is do we still need cash? We absolutely still need cash. I don't think cash is going to be something that can immediately be ruled out. I think what will need to be done is you'll have a combination of both a digital currency as well as cash. And that's something that China, I believe, is doing. The reason for this, of course, is that if you completely switch over to a digital currency, there's still a number of people, as discussed, who don't have access to internet, who don't have a mobile phone, and they won't actually be able to take advantage of a digital currency at all. So I think long-term in the future, you could have a system where it's entirely based on a digital currency, but in the short and medium term, I think it's quite unlikely that you can have a system that is able to move entirely away from cash. Thank you so much for your time. Feel free to email me if you have any other questions or any follow-up, and take care. Thank you.